Let's talk about another mathematical concept that comes in when you take a housing loan: fees. What is this fees and why is it charged? The reason is that every lending institution has costs to incur, whether it is internal costs in terms of salaries and rent and all that, or alternatively costs for, say for example, pulling a report from a credit bureau, looking at your KYC documents and pulling some documentation from external agencies. Now, what the institution will do is they'll charge you a fee. In common parlance, that fee is called processing fee. There is also a cost that the lending institution incurs for doing the legal appraisal and the technical appraisal. The lawyer who looks at the title search, the technical evaluator who goes to the site and looks at the quality and the progress of work. The lending institution, by charging you that fee, will recover some of those costs. What are those fees? Typically, they range from 0.5 to even 1%, and sometimes it is capped at, say for example, 1,000 rupees fixed. These are commercial decisions. So each lending institution will have its own formula, its own table, and its own method of charging you a fee. The most aggressive one will probably not charge you a fee also. But I don't see that happening in the market as of now, and most lending institutions do charge at least a basic fee. Now, is that fee refundable? Sometimes it is, sometimes it's not. Sometimes a part of it is if you don't take the loan or they reject your loan application. Sometimes it is fully non-refundable. Again, an aspect for you as a borrower to bear in mind when you are not only taking a loan, but even when you are switching, you're transferring your loan because of some reason from A to B, there will be a fee, and you need to factor that in before you take the decision whether it is commercially viable and makes sense for you to switch the loan from lender A to lender B. There used to be something called a prepayment fee. If you wanted to prepay your loan ahead of schedule, you are required to pay a fee, which was typically a fixed amount, or it was a percentage of the outstanding loan amount that you are repaying now. However, both the regulators, the Reserve Bank of India and the National Housing Bank, have frowned upon that, especially for floating rates, and you now do not have to pay a fee for switching your loans and making a prepayment. Lenders have tried to influence the regulators to allow that to happen, but as of now, there is no prepayment charge for repaying a loan that you have taken for housing. Now, the other thing I want to talk about here is there is a concept called own contribution and there is a concept called down payment. So let's talk about own contribution first. Again, in the example, to continue with it, if you were buying a house worth say 50 lakh rupees and you took a loan of 30 lakhs, as we said, the balance 20 lakhs is your own contribution, because that is the amount you have to put down to add up to the loan that you take to be able to fulfill your obligation to buy the house. That 20 lakhs is your own contribution. Either you're putting that money up front or you're paying it in installments. That will depend upon your arrangement with the seller. It will depend upon the stage of construction. Is it an under construction property or is it a ready possession property? And that effectively is your own contribution. The own contribution is from your own resources. Now let's add another dimension to this, which is the down payment that you make. Let's divide this down payment concept into two components: when you're buying an under construction property and when you're buying a ready possession property. When you're buying an under construction property, typically from a developer, when you sign the original document initially and you make a booking, you make a payment to the developer. That's the down payment that you make, and it is normally a component of your own contribution. Then subsequently, you will pay your own contribution and take the loan as the building progresses, because as we discussed, this is an under construction property. Now let's take the other example where you actually are buying a ready possession house, either from a developer or from a reseller, from another individual maybe. Again, what would happen here is that when you're buying it from a reseller, you would shake hands on the price and then you would agree to sign an MOU or an equivalent document which formalizes the handshake that you have made. As a gesture of your seriousness, you will make another payment to the seller, which then again is part of your own contribution whilst you pick up the loan that you have chosen to apply for. That amount of money that you pay at the time of the handshake and the legalization of that process is again your down payment. Now, typically when you're buying a ready possession house, you are probably going to make the full payment all in one shot and take possession of the house. Then the down payment and the own contribution come together along with the loan and you make one full payment to the individual.